Please subscribe, like, and share. It really helps us out. And of course, if you have any questions, comment below and we will answer you as soon as we can. Hey everyone. Welcome back to our accounting series. In today's video, we're covering a fundamental part of bookkeeping, books of original entry and ledgers. By the end of this video, you'll understand what books of original entry are and their purpose, the role of ledgers in organizing financial transactions, how transactions move from the books of original entry to the ledgers. Let's get started. Every financial transaction must first be recorded somewhere before being classified and summarized. That's where the books of original entry come in. Books of original entry are the first place transactions are recorded before they are transferred to ledgers. These include Sales Journal, records all credit sales. Purchases Journal, records all credit purchases. Sales Returns Journal, records goods returned by customers. Purchases Returns Journal, records goods returned to suppliers. Cash Book, records all cash and bank transactions. General Journal, used for special transactions, like depreciation or correcting errors. Let's say a business sells goods on credit for $1,000 on February 5th. This would be recorded in the sales journal like this. Later, this transaction is posted to the ledger under the customer's account. Once transactions are recorded in the books of original entry, they are transferred to the ledgers to organize them into accounts. There are three main types of ledgers. Firstly, the sales ledger records all customer or accounts receivable transactions. Secondly, the purchases ledger records all supplier or accounts payable transactions. Thirdly, the general ledger records all other accounts like capital, expenses, and revenue. Let's take our earlier $1,000 credit sale to ABC Limited. After recording it in the sales journal, we post it to the sales ledger under ABC Limited's account. At the same time, in the general ledger, we update the sales account like this. Let's summarize. Books of original entry are where transactions are first recorded before classification. Ledgers organize transactions into different accounts. Transactions move from the books of original entry to the ledgers, ensuring financial records are accurate. Mastering these concepts is crucial for understanding the accounting system. Thanks for watching. If this video helped, give it a thumbs up and subscribe for more accounting lessons. Have questions? Drop them in the comments below. See you in the next video. Thank you for watching our video. Please like, subscribe and share. And comment below so we can clarify things for you.